Hey guys, please take the time to review as well as understand this disclaimer I'm going to give you. My name is Dantes Lindsay. I am the General Manager of Ducks Trading LLC, as well as the Lead Trainer of StockCraft. I'm not a financial advisor, nor a CPA, and the content I create is for entertainment and educational purposes only. I trade in my account, and everything I do is hypothetical in nature because it doesn't happen in your account. My experience with trading is not typical, nor does it guarantee that similar results will be obtained by you. I am merely sharing my opinion with no guarantee of gains or losses in investments. Remember, day trading can be extremely risky. You should be prepared to lose all the funds that you use for day trading. In particular, you should not fund day trading activities with retirement savings, student loans, second mortgages, emergency funds, funds set aside for purposes such as education or home ownership, or funds required to meet your living expenses. Further, certain evidence indicates that investments less than $50,000 will significantly impair the ability of a day trader to make a profit. Of course, an investment of $50,000 or more will no way guarantee a success. Please take the time to review as well as understand this disclaimer for your safety as well as mine. With that out of the way, let's get into the content. The content we're going to cover is given a little bit more distinction between a trader's mindset and an investor's mindset. And I'm going to broach the topic by showing you a few tickers that I believe are tradable, but not trackable, that come from the previous 2 to 3 weeks in the small caps. I'll also add in a peek at the statistics of my trading from the past few months. Let's get into the content. So first thing I want to run down for you is the trade review list. Today we're going to look at a lot of small caps, and generally in the Ducks Trading LLC, we look at the NASDAQ small caps, generally under 300 million. I tend to shy away from Amex because I believe it's a little more manipulated. And when it comes to the New York Stock Exchange, I think they're more for larger caps. And so I tend to believe when you're trading, especially day trading, you're going for short term. And so with short term day trading, you get into a mindset where you want to secure your profit first, and then you start making money. And so your job is to pretty much put yourself in a mental state as well as a position where you can lose minimum amount of money. And then after you get your risk management to a certain point, then you start learning how to make money. More specifically, in the long run, make more than you lose. And so that might sound like super obvious, but there's a creative approach that you can take to achieve these results. And it's more of like an engineering kind of approach. And then the rest of it's more of just, ego management. At the end of the day traders or short-term traders, they look for patterns so they can find their window of opportunity, look for a profit margin, and then they give themselves a very specific max loss, and then very systematically take executions so they can make profits in the long run. Now, there's a certain probability mindset you have to stay in to be able to achieve such a goal, as well as have a little bit of experience to keep your composure when trading. And so short-term trading, it's very lucrative and stressful if you are not familiar with the environment. Now, the second type of trading I would like to talk about will be more long-term trades. I'm not talking about swing trades. I'm talking about the investor's mindset. And this is where you're thinking more long-term in terms of when you go into a company, you're not just looking for quick, volatile gains like you are with day trading. You're looking for something with strong fundamentals, or it has a predictable projection of a good future, and you genuinely want to invest in the mission or the growth of this company in the long run. And usually the people with the long-term investing, they have a lot of money. I'm talking buku bucks. And then they put money down and they just try to get a secure 10%, 20%. That same kind of mindset is found in the short term. You want to focus on making a robust strategy or securing your money first, and then learning how to make profit. At the end of the day, that's the essence of trading, just making sure you win more than you lose. And so it's better to think from the max loss perspective. Now, with that out of the way, that just gives a very rough understanding of the short-term mindset and then the long-term mindset. With the Dux Trading LLC, where I come from, we try to focus on NASDAQ sector, the small caps under 300 million. And I already said the Amex is slightly manipulated. New York Stock Exchange is for larger caps. That's where you go in and you find those small caps. With small caps, you'll see a lot of volatility because there's less supply. And then when there's less supply, there's more volatility because there's more demand. But if there's no consensus on whether it goes up or down, it's going to be very volatile. So I like to make sure the small caps are the place I focus on when I do my short-term trading. But when it comes to long-term trading, I'll stick to indexes or companies with a very large fundamental, but they're easily influenced by news or foreign policy or the Fed hikes, interest rates. Right now, there's a current war going on. And, just to segue from that, I'm going to show you the last 2 months of my trading. Yeah, so in the last 2 months of my trading, January, there wasn't a lot going on. I made exactly 2 trades. And with those 2 trades, I came up with 4K. And so if I go to the monthly, or if I go to the calendar, you can see the 2 trades I made. One day I made $400. And then the second day I made 4K. If you go to the next month, which is this month, I made 7 trades total. I lost 4. I won 3. I came up 17K on this month. So total in the last 2 months, I've come up 21K. If I'm doing math correctly. Yeah, 21.3K. The thing I wanted to show you was when you look at these trades, I was doing short-term trades. When you come down to the trade in January, this 4K trade, this took about an hour or 2 to make this 4K. This 400, this probably took like 5 hours to come out with the 400. But notice I only went in twice on here, and then I went in 1 time here. Same thing with the other 7 trades right here. I went in 1 or 2 times each. Anytime past 2, I don't feel mentally composed enough to make a rational decision after that point. But that's just my personal temperament. And that's also a good habit to have. But main reason I brought this up was in here, there are also trades where I did options instead of day trading. And this 25K trade is an example to where there are 11 trades made during 21 days. On February 3rd, I made my first trade on SPY. Well, technically that's a lie. Like I did 1 test trade, but that was like just to see how it worked. But this was my actual first trade on SPY, and I bought a put all the way at 453. I was pretty much going on the idea that interest rates were going to hike, the dollar's overbought, and all kinds of bearish news in the market. And this shows a little bit of my experience in technical analysis, seeing that the dollar is overbought and that a certain resistance is being tested at 460, and it bounced off of that. And then it already had a history of breaking another resistance at the 420, 430 area. And so just looking at the technicals that I got from my experience with the small caps, I brought it into the large caps where it's more influenced by other forces outside of like my control or like my awareness. But the overall trend is going down. And it's a good idea when looking at large caps to not only know the trend, but also know what is the major influences on the large cap that you're trading. And in SPY, I'm looking at the S&P 500. I'm looking at foreign currency and anything that can influence the overall economy, the value of the dollar, the top 20, most likely the top 5 companies. Like, I'm looking at so many upcoming earnings, news that will give rumors. At the end of the day, there's a lot of sayings on Wall Street. There's a lot of rumors and catchphrases. One of those is buy the rumor, sell the facts. Buy the drums, sell the trumpets. Buy, sell, sell, sell. There's so many like just one-liners out there. And at the end of the day, there's a lot of people that are investors that are in this for the long term, or they're just stubborn because they've been waiting for their opportunity just to buy for a long time. It's all just betting up or down. And you have to have a decent idea of when is it a good idea to think short term, when is it a good idea to think long term. And that's where having a general idea of what investors are thinking, and then having a general idea of what traders are thinking is really good to have on hand, because the investors are the ones with money, but the traders definitely have their short-term influence. And what it looks like when you like zoom in is just a lot of volatility. So again, I made this on the 2nd of February. And, I held it all the way up to the 24th. The thing is, if I actually sold it on the 24th, like fully, because I sold it in 3 positions, I could have made triple my money. But instead, I sold half the day before, and then it gapped down even more in the morning the next day. Then I sold the rest. Then next day, gapped back up like $30. Technically, it was like a day and a half later. Then I went right back in. Now, the reason I went right back in is because that's where the short-term experience comes in. Technical analysis. Anything that goes up really fast is going to come down really fast. At the same time, I'm also doing my homework. I understand that there's a war going on. I understand that there's more rumors coming in. And you remember what I said before? Buy the rumors, sell the facts. The fact of the matter is there's a war, and then it's potentially nuclear war, a potential like attack on other people's economies. Other people's economies that we have strong ties to. And so there's a lot of optimism going in the market right now, and they're going to buy temporarily because they think that they're getting stuff cheap, but the dollar by itself is already cheap. That's all I really have to say about that. But other than that, I'm going to actually get into the charts this time. So sorry about the rant. I just ran around in circles. So last 2 weeks we had these tickers, and these are the dates that it was mostly popular. ISPO also came back like a few days later on like the 24th, I think. Let's look at that first. ISPO, like most of these are IPOs, and they're not ideal. And they're mostly not ideal because they're micro floats. And so I said it before in the beginning, we look at NASDAQ's small caps, but if the cap is too small, it's too volatile, and a lot of people get discouraged from trading it once there's too many people inside, or there's just no chance of it going one direction because it's just too small and hands change too many times. It goes into that nature. But with ISPO, this was an IPO where it had some very weird price action, and it went from $12 to $108. I'm not brave enough to try to short into something that goes like that on the first day. We call that a first green day. But when it came back down, there's a chance for more people to touch it. And at that time, I was too focused on my SPY because I had most of my money in there. And I told myself I would only trade something that was ideal. At the end of the day, this ISPO, it wasn't ideal if you were going short. And most of the perspective I want to talk about is going short. This went up a lot. Like this went up over 700%, as well as like a few other tickers. And the catalyst was the technology sector, consumer cyclical sector and another sector were hype, or they had a hype after the market rallied when most of the shorts covered. And then the people saw that perk and then they bought into the market, and Tesla came out with like something new. The sanctions on a war, they were less severe as people thought. And so, you know, not terrible news is good news. And that's how it goes with like the traders. Now, investors and traders, like there's a difference before. I've been like talking very vaguely about it, but that's the kind of essence that this goes into. They just want something that gives them like a quick hit of like dopamine. And then that dopamine pushes the market, but then it comes down really quick. Now, at the end of the day, this came back after it hit 30 and it went back up to 60. Now, on this point, I could have actually went in, and I thought about going in, but I ended up trading like on SPY that day, and I think INDO. And now, since ISPO, I already said it wouldn't ideal, but it's definitely tradable, because like all this range, that's definitely something you can short, like especially on any of these days coming back. But you also could have got squeezed like this happening right there, because anything that can move like that much range can do it at any point, and that's scary. Yeah, it wasn't normal is what I'm trying to say. But when you go to INDO, this was a ticker that ran 2 days, and it had 80 million resistance. And so the day that I tried to trade it, it squeezed me, but I didn't get in like at the squeeze. I was using the 80 million resistance here. It went down. I'm winning like $400, and you know, I could see a squeeze coming, because not only is it a micro float and I'm already uncomfortable about it, like it caught support at 650 when it already went past a certain pull range where it's supposed to lose all its momentum, but instead it came all the way back. You know, I put the rest of my shares down, and then once I saw it was like still testing a very critical area, I was just like, that's enough for me. And I took my $80 and I ran with it. And that's 1%. Let's go to the next ticker. Yeah, QNGY. So this is another ticker. It was on a second green day. So with all these IPOs, most of them are technology or they're healthcare sectors. They're very volatile sectors, and they're the only things in the top gainers that even have like a little bit of range. And so it's getting a lot of attention. But the amount of volume in each is not anything to like be too excited about. And so I just didn't feel comfortable shorting most of these things with the minimum range it gave me. And so it's not worth a track. It's not really a pattern, but you can definitely make money on this. Like these drops right here, like that's definitely something you can make money on. Like extending like 70%, 80%, then pulling back like that. But then next day, you know, it goes even higher, like 100% pushes after already doing an 80% push. These are definitely signs that there's going to be a pullback in the short term. And in terms of investing, these are penny stocks. They're all under $10. So no one's going to really invest in these. The only reason they're hype in the first place is because their entire sector is like hype. It's very popular right now. It's the current trend of the day. And, you know, it's the thing that saves the market when it's going down. And when all that volume goes into the penny stock, that's where all this volatility comes from. But it's gone over the next day to like the next couple weeks. And that's what you see all these like slopes are. Now we go to the next one. You got NRGV. This was another IPO to where only thing hype about it is that it had this same sector as the previous. And so there's not much to say about it. It's actually a little bit less ideal than the other ones, not as much extension, but there's definitely something that could have happened here in terms of, it went to 22 all the way from 11. And so with that in mind, that's 100% extension. And so if you, had a systematic system and you're just trying to make 20%, 30% on each one of your trades, you can just go to those random extensions and risk a fixed amount of like 5%, 10%, and then aim for what you can get. Just make sure you track what you're doing down to a T and not get too greedy. Instead of aiming for the full like 80% pull here, just aim for like 30, aim for half, and take profits on the way down. That's pretty much it. But at the end of the day, this still isn't ideal. There's a lot of things that could have been improved by this, like in terms of not only the market cap, but the market cap to float ratio. The market cap right now is over $1 billion. Remember what I said before, we tend to have NASDAQ be small caps under 300 million. And so that's way over our criteria. But that extension is real. It's still a penny stock. That's why it's up here. Now, everything else falls into the same category where there's 75 million traded here. And when there's a big spike like this, there's a lot of people that could potentially be trapped in that point. And so when it spikes back into that area or even close to that area, you can use that as a wall to bounce off of. It's a resistance. And so that's why this is up here, because most of the stuff I showed you before, they're just big spikes and you're just taking a shot into an opportunity based off of pure extension. But when you're looking at like INDO or FGI or INN, all these with previous history of resistance, that can have bag holders, and those bag holders will act as resistance. Now we'll finish it off with KSCP. This actually should have been like the first one on the list, but this one went from $7 or $6 to like $27, and you can see there's like a bunch of volatility up here. Like during all this, there's people that are trapped, or there's people that will be affected by seeing this on the chart, depending on whether you're in the investor mindset or you're in the trader mindset. At the end of the day, you could have took your shot anywhere in between this, even like in this pre-market right here, and just rode this all the way down. And these double tops up here, that's very safe. At the end of the day, this came back for a bounce. So when we take this to the 1 day, you can see it does the same stuff we were talking about before. It created some kind of, not consolidation, but it had a lot of volume, and then that volume trapped some people. And then it made it harder for there to be a bigger move. And so this is another day where you could have made a little bit of money to where, if you went in like on any one of these spikes where it's testing like pre-market resistance plus previous days like highs, even the like lower highs, you can ride this all the way down. And when you see all this volatility, there's people that are stubborn. It doesn't have to be that many. It could just be people recognizing the technical analysis, and you could ride that all the way down. But this one's more of a long trade. It's a swing trade. Not only does it have to have all these peaks and valleys here, like these are connected, this is connected, like it's all congested. At the end of the day, you also see there's 70 million volume here, 20 million volume here, 30 million volume there. When you see all that volume there, and it's showing some kind of weakness, like it finally broke the high of here, the second high of here, and then the low, you can just ride that as long as you really want to, all the way down back to where it came from, where you see it bounced at $6. Remember, this used to be at $26. And now when you see this came all the way down like that, and bounced at $6, that's something that's predictable. Because remember, This is an IPO. This started at $6. You know, you could see all kinds of stuff like that in each one of these stocks. But at the end of the day, it's still not ideal because either the float's off or the cap's off or the sector's off, or there's not enough volume to justify going in as safely or as big as, you know, like to my personal like level I want to go in. Because main thing is, remember, I put most of my money into in SBY, you know, like, and if it gave it percentage, I'm talking about like 70 to like 90%, sometimes 100%. And so for me to be able to take that out, you have to get me out of retirement, because that's what it comes down to at the end of the day. Like the investors, they have a retirement mindset. The short-term traders, the day traders, they're the ones trying to get that quick buck because they see the opportunity, because they see the pattern. They recognize that there's a profit margin here, and then they're going to capitalize on it because it's people versus people at the end of the day. That's all I really wanted to show you for now. All right, so this video ran a little long, guys. Hope you like what you saw. If you did, please like and subscribe, and I'll see you in the next video. Peace.